Welcome everybody to our today's session on the European retail payment market. We will ask ourselves with our speakers whether this market is today at crossroads. If yes, why? If not, why? And before going into details, Mr. Haag from the European Commission will make a keynote speech related to retail payments and more specifically, to the retail payment strategy of the Commission. So I will leave the floor to Mr. Haag for this keynote speech. Thank you.
Ladies and gentlemen, good morning. I'd like to thank the International Bankers Forum for inviting me. With a total annual value of some 200 trillion euro in the EU 27, payments constitute the lifeblood of our economy. The profound digital transformation that the payments market is undergoing therefore deserves our full attention. The use of cash is in decline, and the COVID pandemic is playing an important role in contributing to the fast rise in demand for digital and contactless payments. A recent study of the European Central Bank shows that during the pandemic, some 40% of euro area citizens used contactless card payments more often than before. And this transition to non-cash payments is likely to be sustained going forward due to the rise of e-commerce and digitalization of payment solutions. It is not surprising that the payments business is attracting brand new entrants. Global players that were not traditionally involved in financial services like Amazon, Apple, Facebook, or Google have identified payments as an attractive business, although not always for the same reasons. Our retail payments market is highly diverse and fragmented, as demonstrated by varying levels of use of different payment types, such as cash, checks, direct debits, credit transfers, or cards. In the EU, there are many innovative and often very successful national payment solutions, mostly based on mobile phone apps. Unfortunately, many of those solutions do not work cross-border. There is not a single European payment solution which would allow EU citizens to pay in shops across the internal market, let alone internationally. How is it possible that we have a single currency, but a myriad of purely domestic, non-interoperable payment solutions? Strong, homegrown, and pan-European payment solutions is what Europe needs to achieve a greater integration of its retail payments market. This objective is at the heart of the Commission's retail payment strategy of last September. It is also of importance for the economic and financial strategic autonomy of the European Union. For its strategy, the Commission received strong support from the Member States. The strategy is also closely aligned with the strategy for retail payments of the European Central Bank. I'm glad to see that we have some pan-European projects in the pipeline. One of them, the European Payments Initiative, went public last summer. It will be the focus of the discussion in one of the later sessions today. The Commission has closely followed EPI from the outset. We welcome its ambition to launch homegrown and pan-European payment solutions. We also follow with great interest other industry-led initiatives that aim, for example, to promote greater interoperability between the existing payment solutions and, as a result, to facilitate a deeper integration of EU retail payments markets. All initiatives trying to leverage PSD2's open banking potential, whether taken by mobile payment providers or by fintechs, are welcome from our perspective. They show the dynamism of our businesses and the attractiveness of our market. That is exactly what we intended when proposing PSD2 many years ago. We wanted it to be a game changer and put the EU back at the forefront of global competition and innovation in payments. Let me say a few words on our strategy's flagship, instant payments. Instant credit transfers mean that funds are credited to the beneficiary's account within a few seconds. The speed comes with a bonus of instantaneous availability of the service around the clock every single day of the year. These two features respond very well to the expectations of EU citizens when it comes to payments. When combined with mobile phone applications or other technological innovations such as e-invoicing or request-to-pay messaging, instant credit transfers can offer convenient payment solutions for payments between individuals, in shops, online, at unattended terminals, when paying invoices, for corporate payments, and so on. It is therefore not surprising that in some early adopter countries, instant payments are already seen as the new normal. But this is not the case for all of the EU. Currently, the volume of instant credit transfers in Europe, although on the rise, represents only 8.6% of all credit transfers. This leaves the potential benefits of instant payments largely untapped. The relatively low uptake of instant credit transfers could possibly be explained by a low demand and by a low supply of instant payment-based solutions. Without a strong user demand, providers may not immediately see the need to push forward with instant payments. Without the industry offering innovative and attractive instant payment solutions, the demand will continue to grow slowly. To address this, the Commission is investigating what type of enabling measures could be appropriate to promote the full uptake of instant payments in the EU. Our public consultation on instant payments is still open for another week. So I take this opportunity to invite those of you who so wish and who had not yet the chance to do so, to share their views and experience with us. Let me now also briefly turn to cash. Despite the overall shift towards digitalization in payments, cash is still used for 78% of all transactions. Restricted access to and acceptance of cash creates real risks of financial exclusion. We have started to look into the issue in the framework of the Euro Legal Tender Working Group and are closely following the work of the Euro Retail Payments Board on the matter. Based on the outcome of these work streams, we will assess the next steps. And obviously, there's no discussion possible on the future of payments markets without touching upon, at least shortly, on the digital euro. A digital euro can support Europe's digital transformation, its open strategic autonomy, and the international role of the euro. But it must be carefully reflected and well designed. The Commission is currently engaging in exploratory work together with the European Central Bank, and our services have started jointly reviewing a broad range of policy, legal, and technical questions. We need a thorough analysis of how a digital euro can achieve its objectives while complying with relevant legislation such as data protection and anti-money laundering and counter-terrorist financing rules. With regard to retail payments, a key question is to avoid crowding out effects. The digital euro should exist alongside payment solutions developed by the private sector, and regulated intermediaries should be able to distribute the digital euro and offer additional services on top. With this, I will stop. Thank you very much for your attention and pass the microphone back to Victor.
Thank you very much for your introductory speech, Mr. Haag. It was very encompassing. We have a very encompassing topic today. So I will now briefly introduce the speakers, including myself, before leaving them the floor to give their first thoughts on the topic. So I'm Victor Varem, economist at the Center for European Policy, and I will moderate this session today. Mr. Haag, which just made this keynote speech, is the Director for Horizontal Policies at the European Commission. Martina Weimert is the CEO of the European Payments Initiative. So project which Mr. Haag mentioned during this keynote speech. We also have the chance to have Manfred Schuck from the Frankfurt Payments Network, as well as Thomas Egner from the EU Banking Association. So, dear speakers, would you please help our audience understand whether the European payment market is according to you at CROSSROADS? If yes, why? If not, why? I will first leave the floor to Martina Weimert, if she wants to talk. Thank you.
Yes, hello, thanks, and good morning to everybody. Yes, so to your question, I think first of all, it's a quite unique moment that we are living because as it was mentioned, we have in Europe quite successful solutions which are mostly domestic or local, and there are many of them. And on the other side, we don't have a pan-European solution, and we can see that we have consumers which are more and more educated and know about digital payments. Our research shows that there is still quite some untapped needs and some further developments needed. So, and as it was mentioned also, we still have a lot of cash. So this creates for me an environment which is quite interesting because it shows that there is a potential for future development, that we have needs that we should cover. And on the other side, we have three aspects which we can really leverage and which are particular to Europe. So instant payments, the digital euro, and the digital identity. If you would combine all three, you would have a very strong boost in digitization of the European economy, and it would be an outstanding benefit for every European consumer, but also for the merchants. So I think this whole environment, plus the awareness that we now have in the full market from all kind of players, and luckily also including from the regulator, that we need to move ahead and that we need to get to strong solutions in Europe, is, I would say, a great environment, and for me, really a unique opportunity.
Thank you very much. Thank you very much, Mrs. Weimert, for these thoughts. So indeed, you emphasize the need of a pan-European solution for payments. So I would ask Mr. Schuck what he actually thinks about this and what's his vision of the European retail payment market in general. Mr. Schuck, I'll leave you the floor. Thank you.
Yes, good morning. As the president of the Frankfurt Payments Network, I like to welcome you. We are one of the supporters of this first International Payments Conference of the IBF, and I am pleased to be here today and share my thoughts with you. Regarding the question Victor just asked me, as a German, I would say a clear Jein, which means yes and no. So to a large extent, we heard already this morning from Burkhard Balz from the Bundesbank and from Marcel Haag that still between 3/4 and 2/3 of all retail payments are based on cash. So there's a long way to go to really come to a cashless society and the digital economy, which are two sides of a coin going together. But we clearly saw that during the times of the COVID pandemic, things have changed more rapidly than they did the years before. So I'm confident that we are not only seeing fintechs taking the floor and trying to change the payments behavior in the retail world, but also the big techs like Apple. And we talked about this morning regarding soccer or football, as we say. And I was very astonished to see yesterday when the day before yesterday when the Germans played their first game, that the main sponsor is Alipay. So we can see that on a broad scale things which we took for given for decades are going to change more rapidly than one would have thought. And as Martina just mentioned, with the combination of digital identity, who makes clear that the one who pretends to be someone really is the same person, and with CBDCs and other means of electronic payments in the next decade, the retail market, from my point of view, will change more drastically than we saw it in the last 50 or 60 years.
Sorry, yeah, sorry for this little latency. Thank you very much, Mr. Schuck. So it was a very interesting intervention. So yes, indeed, we can put in parallel the need for a pan-European solution with the fact that competition is intensifying, and as you were, I was also a bit astonished by the Alipay sponsor during the France-Germany football game we had two days ago. So things are moving fast on this market, and I would like now to know what Mr. Thomas Segner thinks about the set of facts. So I will leave you the floor, Thomas Segner. Thank you.
Well, thanks, Victor, and thanks for having us here today. We're, as following your introduction, you said we're the Euro Banking Association, and that's really what I want to point at in my first statement. Whereas banking does not mean banks, but our membership consists of banks, global bank, regional banks, and also local banks, but also IT companies, service providers, consultancies, fintechs, academia. So we really have a very broad view with regard to payment topics. I would not say even pan-European payment topics, because what we see currently is that payment topics really develop on a global level. The topic of this session is European retail payment markets at CROSSROADS, and different to Manfred, I would not answer this with a yein. I would clearly say yes, and it has always been a yes. It has always been a yes from the beginning on. Retail payments or payment systems, payment products, and payment services are always challenged, and they're challenged because of different reasons. First, I think there's even, and perhaps the most important one, which is customer expectations, and today customer expectations, they develop very much, and they're very much also aligned to what customers see and experience from other fields of business or in their daily private or professional life. So they have a clear expectation with regard to payments to be all electronic, to be ubiquitous, to be intuitive, to be secure, to be easy, to be informative, to be interactive, and all of this because they are used to a life which is always on. And that is also and already the first big difference to, let's say, payments experience we have had as customers, or also as banks, as service providers, a couple of years ago. So the next big challenge the banking industry has to face, and also Manfred pointed already on that fact, are the new competitors. And you can find many of these new competitors. In a couple of years ago, we were talking only about fintechs. Now we talk about big techs. Data economy has been mentioned. But there's also the question: what do we look at? Do we just look at payments, or do we better look at transactions, encompassing the full flow of a business transaction? Total cost of ownership, in my opinion, also falls in there. Regulation and regulatory initiative, that's also a thing banks are constantly confronted with, together with cost. Regulation does and ever will come with cost, but there's also cost banks have to bear with regard to developing their business. And finally, I want to point at two items which also do play a role in managing the crossroads as today's challenge. Number one, that's talent management. I think that's a very important thing. Banks have to look at more specifically, perhaps in the area of transaction banking. And a second item I want to point at, and Martina already mentioned this, she said digital ID. I would call it managing trust. I think that's a very important part of the banks to deal with, managing trust. Way to solve this are, in my opinion, a couple of co-strategies, so cooperation, co-petition, so collaborating with your competitors, co-creation. I think these are things the banking industry is used to. We did that since the beginning on. Banking, in most cases, is a two-sided market and a four-corner model. So you have to deal and you have to cooperate with other market players. And finally, and last but not least, I want to point your attention to a simple fact that payments, at least following McKinsey from a survey they did back in 2019, that retail customers have on an average 240 touch points with their bank per year. And over 90% of these touch points are payment related. So it's being at an ATM, paying online, paying with your app, paying with your web banking. So many of these touch points have to do with retail payments. And by the way, if you look then at the full set of or the hierarchy and the list of touch points, insurance, by the way, has less than 5, where social media has 400. And next to the second, so to say, the second place after social media is retail banking. So this really underlines the importance payments has for the relationship and the good relationship between a bank and their customer, and the successful development of payment services. And that's why my answer to this question at the crossroad is clearly a yes.
Thank you very much, Mr. Egner. It was also very detailed, very encompassing. So we already have said a lot regarding retail payments. I think to sum up really briefly, what comes out of these interventions is probably the fact that we observe changes on the demand side of the market. So consumers are changing their way of perceiving payments, of paying in the everyday life. They turn to digital solutions, for instance. And on the other side, we also have big changes on the supply side of the market, with new actors coming in from China, from the US, in the digital sector. And at this stage, the retail payment market indeed seems to be at a crossroads, which is why we will investigate the situation even more by first looking at the demand side of the market, if you will, dear speakers. So I will first ask Mrs. Weimert what she actually thinks of what happened regarding consumers during the last years on the European retail payment market. Mrs. Weimert, have you seen changes? Have you seen consumers turning to digital solutions, to cards, and in which proportion? And do you see also maybe an acceleration of these trends in the context of the COVID-19 crisis, which would justify also the introduction of a pan-European solution? Thank you.
Yeah, and thanks for the question. Indeed, I mean, as it was already mentioned, the crisis and what we all experienced was a clear accelerator. And I think we now have in front of us a consumer which is much more educated because he was forced to experiment different things, and even people who were reluctant to contactless, for example, or wallets, now are adopting these technologies and solutions. So I think the first thing we could see is, well, that the element of basic features to be there, so the security, the convenience, the ubiquity is absolutely a basic condition. So it's not differentiating. And that is taken for granted. If you're not able to offer this, then it's not even worthwhile to start. But by far, this is not enough anymore. As you can imagine, while we are working on EPI, we did a lot of consumer research very recently, and we could see that now among the various European countries, we see that there is a consumer demand of very complete wallets from 68 to 84% of the population. That is a very massive shift, because before the crisis, wallets were more used by certain groups of the population, but not by everybody. It has become an absolute mainstream feature. And what we see is that, well, you have to offer a lot of things in there. There is the demand for broad use cases, not just one. So you cannot just do P2P or just do e-commerce if you now want to emerge. So you have to be broad. You have to offer the choice of different payment means. This whole forcing you into just one solution, one setup, does not work anymore with people who are savvy about everything that is out there. And the people are expecting clear additional value. And that means different things. There is also the need of choice, because we are not all the same, or we don't all have the same needs. So what we found out is that there is a clear demand for things like consumer protection, loyalty, couponing, financing, and, well, the fact that the transaction history should be always visible in the wallet. So these kind of features have become like the cornerstones of any new solution. And of course, they're very challenging for the market. But overall, I think we have not to forget one thing. It's always about the money of the people, and they still request that you build up the trust. Trust is something you earn, and trust you deserve it. And that means that you have to deliver, and that you have to deliver this additional value.
Thanks. Thanks a lot for these interventions. Indeed, as Mr. Egner already emphasized, indeed, managing trust, building trust seems to be central in shaping a new pan-European solution, which would drive the European retail payment market to go in one specific direction. So I would also like to ask now to Mr. Hag, if he will, whether he also sees changes regarding the payment habits of consumers. Thank you, Mr. Hag.
Yeah, thank you for the question. I think the main trend has been already mentioned several times, and that's the increase for digital and contactless payments. This has been strongly accelerated by the COVID-19 crisis, so by an external factor. But in spite of that, we would expect this to be a trend that will continue beyond the crisis. It's been the crisis has been the pandemic has been an accelerating factor, and we expect that the consumer preferences that are reflected in in more digital, more contactless payments is there to stay. The digitalization of payments will continue, and we believe that instant payments can play an important role. And here there is also the question of affordability and consumer expectations. The situation is very different as regards this aspect. It's already been mentioned that there are a number of countries in which instant payments are the new normal, but there are also market participants out there who consider instant payment to be a premium service, and that is reflected in the fee structure. In the fee structure, of course, that is dampening demand. And we can see that in the very uneven development of the national markets across the European Union. We had a webinar organized by the Commission last week to analyze the perspective of consumers, retailers, and corporates as regards the opportunities of instant payments, and there is a clear expectation that the demand for instant payments will continue to increase and increase fast. Next to the question of the fee structure is obviously also the universal use of payment solutions, and here there is also a clear expectation that payments that it should be possible to make payments across the entire internal market and also international in the future. And then obviously, and that has been mentioned as well, cash we think is there to stay. It's the only public money that citizens can use for the time being without having an account. There is a deep attachment in the population to cash, which we don't think will change easily, but this will not prevent the increase of the continued and sustained increase of demand for digital solutions.
Thank you very much, Mr. Haag, for this intervention. I would like now to ask Mr. Egner about the fact that, of course, we see transformation of the retail payment market in Europe. But for instance, compared to China, where there was a big surge in the use of digital payments during the last decade, we have a very different environment because it's fragmented. We have national markets. So, Mr. Egner, please, could you tell us how do you see this fragmentation, and where do you think it could go? Will we continue to converge, or will it remain dispersed, fragmented as it is today? Thank you.
Sorry, I had to unmute first. Yes, I think that's an interesting bit or an interesting aspect to the question. Fragmentation indeed is something we are in our work groups and in our discussions are highly confronted with. I think even if we talk about harmonized payment areas like SEPA, there's still I think a couple of rules to be taken into account. On the one hand, you for sure have all the standards. You have the scheme, which is highly standardized, which is highly accepted, and which is supported by all different players in the market. On the other hand, we all know that the standard per se and for itself does not really help to really create a harmonized payment area. So what we are currently seeing is that fragmentation coming from the regulatory side of the business is still a challenge. I would not say it's a problem. That's not true, but it's a challenge. It's a challenge for companies for sure, but it's also a challenge for banks because they then really need to implement different preconditions, different requirements, national requirements into their payment systems. Perhaps that has nothing to do really with payment at a first sight, but we are currently investigating into the topic of KYC, which is, so to say, a first step before entering the payment world. There you still have all the different legal requirements stemming from different national legislations. So my call here would be also try to overcome the pan-European fragmentation from the regulatory side. I think the Commission has understood and is dealing with the fact quite well, but currently that's still a problem.
Thank you very much for your intervention, Mr. Egner. So yes, indeed, we see this fragmentation everywhere in Europe regarding consumers. But now I would like to ask Mr. Schuck what he actually thinks of the changes in habits of merchants and also firms, if I may, and whether also to add a bit of complexity, whether he sees actually changes in different national markets. So, Mr. Schuck.
Yes, thanks, Victor. Yeah, I think that if you look on the merchant side and both the online business and the classical physical store business, the pandemic has changed a lot. So especially during the lockdown phases in different countries around Europe, online was more or less, besides food and drugs, the only thing that could be ordered via the internet. And cash is not a means of payment in online business. So has been a tremendous growth on online payments due to that. But also at the same time, you could see that there was a substantial change started with the big merchant chains like the Aldis and Lidls across Europe, Carrefour, Mercadona, Sainsbury, you name it. And forced through that, also smaller merchants had to change their offering in the ways clients could pay now. Especially in Germany, you could find little signs at the cashier's desk saying card payments as of 20 euros or something like that. This has completely changed. Now you find signs that say, please pay cashless. And also the growing possibility by enhancing the technical terminal capabilities to accept contactless payments have changed the market to my view, because with the raising the PIN bar to 50 euros in the most cases, this has become a very convenient way just to tap your card, or not even your card, but your mobile phone, your smartphone with a virtualized card in it. And so this trend, I think, will not change back in the old way we have it. When we look into the different markets across Europe, I think that is difficult to answer. If we include UK, we can see that the Banking Conduct Authority in the UK has again prolonged the timeline for using a strong customer authentication. In continental Europe, this is more strict nowadays, which has brought in certain areas difficulties, as I heard, for the merchants, because especially in online business, the number of buying acts that have cut off due to the lack of the possibility of the consumer to handle these two-factor authentication is at the moment, yes, something which has to be worked at. Some countries, and I live in Germany and in Spain, and if I look at Spain, particularly, this has been introduced quite earlier. People are more used to it. So I don't think that there are big differences across Europe. There are some also according the technical means of payments. I mean, Victor, you are in France, you know that the carte bancaire there is the main means of payment. If I drive from Germany to Spain, I sometimes have difficulties getting fuel in France, because if I go to a pump at the Carrefour, also the only means of payment there is carte bancaire. That's it. So yes, there are hurdles to overcome, but I think we are on a good and productive way forward.
Thank you very much, Mr. Schuck. So, well, we have very encompassing but also very complex picture of how the demand side of the retail payment market works. We have very different habits regarding consumers in the EU. We also have differences regarding how merchants actually accept payments, cards, cashless payments, only cash for certain merchants. And we also have firms that are trying to adapt by also trying to reduce the amount of money they spend on payments by, for instance, using platforms like Stripe or other new tools that were invented for them lately. So we have a very diverse and very complex and as well fast-moving landscape of how the demand side works in the EU regarding retail payments. So I would like now to ask you about how the supply side works regarding to you, and whether it is also submitted to a lot of changes. And I will end up after this short overview of the supply side with the regulatory questions from Mr. Hack. So first, I would like to know what Mr. Schuck again thinks about this disruption that is coming in from external actors regarding the B2B segments, for instance, for Stripe, for instance, or C2B payment solutions from the GAFAM, for instance, Google Pay, Apple Pay, Alipay, as mentioned earlier. So how do you see this new competition coming in? Is it a threat to the usual European retail payment actors, or is it something manageable? So I will leave you the floor. Thank you.
Yes, thanks, Victor. Yeah, I think it is something manageable. I mean, again, if we look into the football world, which has used today quite sometimes already, the strategy of the trainers differ, and so there's always a new challenge you have to face, and that's, I think, is the same in the of the digital payments. So there will be new systems coming. Some will establish themselves and will stay. Some will fail and will vanish. And it's hard to predict who are the ones that will stay and who are the ones that will vanish again. So we see, if we take Sweden, for example, that they have been quite successful in reducing the usage of cash in the retail market to nearly zero by having a harmonized national solution. So when we talked about fragmentation earlier, and I'm not only looking at fragmentation across Europe, but even looking on fragmentation within countries. And in one of my previous jobs, I was, among others, responsible for the Netherlands. And that is a good example because the Netherlands in the past had introduced to their market some successful things, starting with a national payment scheme called PIN, which was and still is card-based, and then with buy now, pay later solutions, etc. And the reason why this happened so fast and was so well accepted was that there were only practically 4 major banks who are representing more than 95% of the national market. And that shows to me that whenever the market forces on the supply side have the chance to work closely together within the legal framework of competition law, it is far easier to establish new means of payments and being that accepted by the clients, be it for the point of sale, being for government payments, being it for small B2B payments, for these so-called C-goods. You have office supplies and stuff like that. I mean, if we look into Germany, which have the 3 banking sectors with still several thousand independent financial institutions, this is far more complicated to achieve. And having said that, I come back to the beginning of my statement. I think it is manageable. It is different from country to country. But one thing which I want to close up with is the request to payment. That may be, again, a changer in payments behavior across Europe, especially for those countries where direct debits are not that prominent as they are, for example, here in Germany.
Thank you, Mr. Schuck. That's a very interesting point. So we also see fragmentation on the supply side. And as you mentioned, it's really remarkable to see that you have a 3-stage banking sector, for instance, in Germany, which is not the case in France. So we do have transnational differences regarding how retail payments work in Europe. So manageable for you. Good to know. Now I would like to know what Mrs. Weimert actually thinks about also this new competition, these new innovations coming in, and also whether instant payment can be a solution, a new normal, which would foster, for instance, European sovereignty over payments in general. Thank you.
Yeah, thank you. And that is indeed a very important and a very interesting question. So instant payment, first of all, I mean, is the solution which allows to do all kind of payments, which makes it very particular and a great solution, because you can do P2P, you can do all kind of commerce payments, you can do bill payments, international remittances, you can do everything with instant payments. But we are not aligned so far how it should work in commerce. So that's what we try to do with the European Payments Initiative, and also to really get it in a broad usage out there to the consumer. So we should not forget that it's not an easy uptake in commerce, because the simple fact of just having the money on the account of the merchant immediately will not be sufficient to make it the main solution. On the other side, instant payment can offer more things than cards. So that you can have bigger amounts for the transaction, so you don't face the same limits. And you can work on payment situations which are not appropriately covered by cards. So the whole new use cases around flashing a code, that can really be a new driver and convert situations which are today not well covered, which are not at the satisfaction of the merchant or of the consumer. There, instant payment has a big role. Before, I think it can take over all kind of payments. So it's a journey, and we have to be prepared to this. But that is only one part of the site. That is our current challenge on how to bring it into commerce, and in a very consistent way. Because what does it help me if in one market it's a QR code in a push mode, and in another country it's a QR code in a pull mode? And by the way, they are not working the same way. So I end up in a lot of fragmentation. And that's a huge risk that we are facing today if we do not align. But beyond that, I think there is a much more fundamental play for Europe ongoing. If you look at the broader landscape, so looking beyond Europe, you see that instant payment, real-time payment, immediate payment, or faster payment solutions are emerging everywhere. But again, it's just national, local, or regional solutions. Nobody is taking care as of now for the international connectivity or interoperability of these big local solutions. I'm not saying every tiny market solution, but just to align how will international acceptance of instant payment work tomorrow. So what are we doing for this? If we miss our position there and our seat at the table in this regard now, we will complain in a couple of years that, again, I don't know which international player has taken over, and that we are suffering from rules that are imposed to us. So it's up to Europe to stand up in this overall positioning and organize with the other large solutions the interoperability and mutual acceptance of these big solutions that we see slowly emerging all over the world.
Thank you very much, Mrs. Weimert. I think you made your point. It's very clear. It is a moment when Europe needs to unite around its retail payments to be able to have a seat at the table, as you said. So it sounds like we are indeed at crossroads regarding retail payments in Europe. Which is why I would like to ask a last question before closing this session to Mr. Haag and Mr. Egner, so depending on who wants to talk first, regarding regulation. How do you think regulations can help tackle these problems maybe of alignment in Europe on the supply side and the demand side? What are the next steps of the roadmap to help achieve this unification of retail payments in Europe? Thank you. Mr. Haag first, if you want to.
Yeah, sure. Happy to. I think regulation has already made a significant contribution to changing the payments world in recent years. Let me just mention SEPA and PSD2. SEPA is has created a world in which cross-border payments are as easy as domestic electronic payments, and that is certainly a game changer. SEPA is not yet working flawlessly and perfectly. We are working very hard to make sure that the remaining difficulties are being resolved, and that SEPA discrimination will become a thing of the past. And with PSD2, we have seen new business models emerging based on open banking, things like PIS, payment initiation services, and AIS, bond information services, have developed. But we are working in a fast changing and very dynamic environment. So we have to make sure that our regulation remains fit for purpose, that we can maintain a level playing field between different offerings, and make sure that our regulation is regulating innovation in and competition in and not out. And for this, we are currently reviewing the PSD2 directive, and that will take some time. We've started to work on this. We hope that towards the end of next year, we will be able to make a new proposal that can take that is future-proof and fully adjusted to help usher the new payments world in. We're also reviewing the settlement finality directive. So, in a nutshell, we are making sure that the regulatory framework in the EU is supportive of the future digital payments world.
Thanks a lot, Mr. Hag. Unfortunately, Mr. Egner, I think it's time for us to close the session. The music is on. So I thank very much every speaker for your input during this very interesting session. So it does sound like European retail payments are at sort of a crossroads. Yein, yes. Nein, apparently rather yes. So thanks a lot again for your contribution, and hopefully we will have the chance to re-talk about this topic very soon, maybe next year during the next European Payments Conference. So I wish you all a very, very nice day, and see you soon. Bye.